Picture this. You've been trading for months, maybe even years. You've studied every strategy, analyzed countless charts, and spent countless hours refining your approach. You've experienced the highs, the adrenaline rush of a successful trade, that feeling of confidence as you watch your profits rise. But then you hit a rough patch. The losses start stacking up, one after another. It's as though the market has turned against you, and no matter how hard you try, you can't seem to get ahead. You start doubting yourself. You wonder if it's your emotions, fear, greed, impatience, that are ruining your trades. You meditate, you journal, you practice every trick in the book to control your mind, but the losses keep coming. But here's the truth you might not want to hear. It's not your emotions. It's not your lack of discipline. It's not even your mindset. The real reason you're losing money might be much simpler and much more painful. You're trading without a real edge. You've been trying to win a game without understanding the rules, without having the right strategy to begin with. Now, I know this might sting a bit, especially if you've been grinding for hours on end, hoping that the next trade will be the one that turns everything around. But what if I told you that it's not about working harder, controlling your emotions, or meditating your way to success? What if the solution is something much more fundamental? Building a strategy that actually works, a strategy that gives you a real statistical advantage over the market. In this video, we're going to break down the core of what makes successful traders succeed, not through emotional control, not through hacks or magic indicators, but through clarity, data, and systemized thinking. You'll learn why your current approach might be setting you up for failure, and more importantly, how to build a real edge that works in any market condition. Think about it this way. Imagine trying to climb a mountain with a blindfold on. You're doing everything you can to climb, but the odds are stacked against you because you can't even see the path ahead. You might make it a few steps, but eventually the blindfold will catch up with you. That's what trading without an edge feels like. Pushing forward without a clear direction, with all your effort going into something that has no true foundation for success. But what if you could take off that blindfold? What if you could see the path clearly, understand the market's behavior, and make decisions based on data and proven strategies, not emotions or luck? What if you could finally trade with confidence, knowing that you have a system that works, one that doesn't rely on guesswork or wishful thinking? In the next few minutes, we're going to explore exactly how to do that. No more guessing, no more relying on luck. Instead, we'll focus on building a strategy with a measurable, repeatable advantage that you can rely on every single time you trade. Whether you're a beginner or a seasoned trader, this video will give you the clarity you need to stop gambling with your trades and start trading with an edge. Are you ready to learn the truth and take control of your trading? Let's dive in. Trading, especially when you're starting out, is an emotional roller coaster. You wake up each day full of optimism, believing that today will be the day everything clicks into place. You've got your strategy ready, your charts open, and you're feeling good. Then something unexpected happens. Your first trade goes wrong. It's just a small loss, but it feels like a punch in the gut. No problem, right? You'll bounce back. But then another loss and another. Your strategy starts to feel off. You question every decision you made. Was it the right trade? Should you have entered earlier? What about the stop loss? Did you set it correctly? You tell yourself, I just need to control my emotions better. I need to stay disciplined. And so you try again, but this time you're trading out of fear, trying to make back what you lost. The truth is, this is exactly where most traders go wrong. The emotional turmoil that comes with trading isn't just part of the game. It's often the very thing that leads to failure. Emotions like fear, greed, and impatience create a storm that clouds your judgment, leading you to make impulsive decisions that go against your system. But here's where it gets interesting. It's not the emotions themselves that are the problem. It's the belief that controlling your emotions alone will solve everything. What happens is traders often treat their emotions like the root cause of their failure. They spend hours trying to meditate, reflect, or journal their way to discipline, believing that if they can just master their emotional state, they'll succeed. But what they don't realize is that emotional control is only part of the equation. If your strategy doesn't have a real statistical edge, no amount of emotional control can save you. Imagine trying to win a game you don't understand, no matter how hard you try to focus or control yourself. That's exactly what trading without an edge feels like. Here's the kicker: you can follow all the rules, manage risk perfectly, and still lose. Why? Because your setup has no positive expectation. Your trades are built on guesswork, not data. You might get lucky in the short term, but in the long run, the lack of a real edge will bleed you dry. The odds are stacked against you. And this is exactly why over 80% of day traders quit within the first 2 years. It's not because they lack discipline or drive, it's because they're pushing a car uphill without an engine. They've spent years perfecting a system that was never built to win in the first place. But this isn't a tale of doom and gloom. It's a wake-up call. Because once you recognize that the issue isn't you, but rather the system you're using, everything changes. The emotional battle becomes less about self-control and more about accepting that without a system that's statistically sound, you're fighting an uphill battle. And once you shift your focus from controlling your emotions to creating an edge, everything begins to fall into place. You see, this emotional cycle of ups and downs isn't just a trader's struggle. It's the struggle of anyone who has ever tried to succeed in something without the right tools. The difference between success and failure in trading isn't about how emotionally tough you are. It's about understanding how the market works and designing a strategy that has a real edge. Once you stop treating your emotions as the villain and start addressing the real issue, the lack of a statistical edge, then and only then will you see sustainable success. So, next time you feel that emotional pull during a trade, instead of blaming yourself for not being able to control it, ask yourself one question: does my strategy actually have an edge? That's where the journey begins, realizing that the path to success is not through emotional control, but through building a system that works day in and day out. Imagine you're standing at the edge of a cliff, looking out over a vast ocean of trades. Some traders are like surfers, riding the waves with ease, while others are crashing, drowning, and struggling to stay afloat. What's the difference between the two? It's simple. The surfers have a system. They know how to read the waves, how to time their jumps, and when to paddle hard or wait. The others, they're hoping the waves will be kind to them, guessing when to jump, praying that the ocean will cooperate. In trading, just like surfing, you need a system that gives you a real edge. But what does that mean? And how do you build it? Let's break it down. When we talk about a real edge, we're not referring to lucky streaks, insider tips, or hoping that a certain chart pattern will work. A real edge is statistical. It's grounded in data. It's measurable, repeatable, and backed by math. Without it, your trades are just gambles, and you're hoping that the universe will be kind enough to let you win, but the market doesn't care about your feelings, and it certainly doesn't reward hope. So what exactly is this formula for an edge? It's a simple one. Edge equals win rate average win, loss rate average loss. Sounds easy, right? But here's where most traders get it wrong. They focus too much on their win rate and not enough on the other part of the equation, the losses. Let's break it down. Imagine two traders. Trader A wins 80% of the time, which sounds amazing, but his average win is $100 and his average loss is $500. When we plug this into the formula, 0.8 100 minus 0.2 500 equals 80 minus 100 equals negative 20. So despite winning 80% of the time, Trader A is losing $20 per trade on average. That's the harsh reality. High win rates alone don't guarantee profitability. Trader A might feel like a winner when he gets a string of victories, but over time, those big losses will wipe out all the gains. Now let's look at Trader B. Trader B wins only 40% of the time, which sounds terrible, right? But her average win is $300 and her average loss is $100. When we plug this into the formula, when we 0.4 times 300 minus 0.6 times 100 equals 120 minus 60 equals 60. Trader B is making $60 per trade on average, despite losing more often than winning. She's losing more than she's winning, but because her average wins are significantly bigger than her average losses, she's still making money. This is the power of a real edge. It's not about winning all the time. It's about having a system that makes money over the long term, even if you lose more than you win. The key is to focus on the math, the ratios, the averages, the win rate, and most importantly, your risk reward. Most traders get stuck chasing a high win rate because it feels good to win. They think that the more they win, the better their system is. But the real secret lies in the math. Edge is about making more when you win than you lose when you lose. Now let's talk about how to actually calculate your edge. It's not just about remembering your last 5 trades or feeling like you're doing well. It's about tracking every single trade, win or loss, and getting honest with yourself about your numbers. Most traders don't know their real edge because they've never calculated it. They remember the wins more than the losses, and they often forget the trades that didn't work out. But if you're serious about being a successful trader, you need to track your results meticulously, and that starts with the numbers. Here's your challenge. Right now, take a step back and calculate your edge. Look at your last 30 trades. Find your win rate, your average win, and your average loss. Plug these into the formula. What does the result tell you? If it's positive, you have an edge. If it's negative, it's time to reassess your strategy. This is the first step toward building a real, sustainable trading career. But here's the most important part. Knowing your edge is only the beginning. Once you know the numbers, you can start to refine your strategy, test new approaches, and make adjustments based on data, not emotion. It's not about hoping the market will work in your favor. It's about building a system that consistently gives you an advantage, no matter what happens in the market. Now, I want you to think about this for a second. Do you really know your edge, or are you just trading on hope and emotion? Because the difference between the two is the difference between gambling and trading. If you don't know the numbers, you're gambling. If you do, you're building a system for success. Now that you understand the importance of having a measurable edge, it's time to dig deeper into how you actually build one. This is where the magic happens, the process of taking a strategy that works in theory and turning it into something that consistently produces profitable results. Building a real edge isn't something that happens overnight. It's not a quick fix, and it's not about chasing the next best indicator or strategy that promises instant success. No, building an edge is a process of meticulous observation, testing, and refinement. It's about understanding what works, what doesn't, and why. It's about turning your trading into a science, not just an art. To start, let's revisit the idea of pattern hunting, engineering your own edge, and reverse engineering success. These are 3 powerful methods used by successful traders to gain a statistical advantage. But in order to apply these techniques effectively, you first need to have a clear understanding of what you're looking for. Pattern hunting is about observing the market and identifying repeatable behaviors. Think of it like being an archaeologist, digging for patterns hidden in the noise. This doesn't mean memorizing candlestick formations or relying on simple chart patterns. Instead, it's about finding subtle, statistically significant patterns that occur time and time again. It could be something like observing how the market behaves after a certain news release, or how certain assets tend to react to economic data releases. Maybe you notice that after oil prices drop more than 5% in a single day, airline stocks tend to rise 65% of the time the next morning. You didn't read this in a book. You found it by observing, recording, and testing. But here's the catch. You're not looking for patterns just because they feel right. You need to test them. You need to track your observations and build a database that shows you not just where the patterns appear, but how often they work. This is where the real work begins. The best traders don't just guess, they track, they test, and they refine. They turn their observations into a repeatable process that they can rely on. Engineering your own edge is the next step. This is where you actively create hypotheses about the market. You think, what if stocks that gap up by 4% after earnings with higher than average volume continue to rise 70% of the time? You create your hypothesis, gather your data, and then test it relentlessly. You don't rely on feelings. You don't base your decisions on what worked for a few trades. You base everything on data. In fact, the more data you collect, the clearer your edge becomes. This process is like running a science experiment. You're testing different variables, collecting data, and analyzing the results. Over time, you'll see what works and what doesn't. You might find that your hypothesis works 68% of the time, but only when certain conditions are met, like high volume or a specific news catalyst. That's the kind of clarity that allows you to build a reliable edge. And remember, this isn't about perfection. Even a 60% success rate can be incredibly profitable when paired with proper risk management. Reverse engineering success is one of the fastest ways to build an edge. This is about taking the biggest moves in the market and analyzing them forensically. What happened before the 500% rally? What were the conditions that led to that move? Was there a volume spike, a specific catalyst, a change in sector behavior? By dissecting these big moves, you start to understand the conditions that trigger market explosions. This isn't about catching the move as it happens. It's about recognizing what happens next. This is where you build a framework for recognizing setups before they happen. For example, maybe you notice that every giant squeeze had four things in common: low float, high short interest, a catalyst, and a volume explosion. Once you identify these common traits, you can begin to build your strategy around recognizing these opportunities when they appear. But no matter which path you take, there's one thing they all have in common: documentation. The market is your laboratory. Every trade, every pattern, every observation is part of the scientific method. You're not just gambling, you're hypothesizing, testing, and analyzing. You're turning your trading into a process that works over time. Here's the crucial takeaway. Once you've identified a repeatable edge, you stop trading on hope and start trading on certainty. You know what works, you know why it works, and you've proven it with data. The fear of failure starts to disappear because you know that even if you lose a few trades, your edge will carry you through over the long run. But here's the real kicker. Knowing your edge is only the beginning. Now you need to embody it. What does that mean? It means that your edge is no longer something you just follow. It's something you live. You become so confident in your edge that it starts to feel like second nature. Your system becomes an extension of your thinking. You don't second guess it. You don't doubt it. You trust it because it's been tested and proven. Now that you have a clear understanding of how to build a real edge, we need to shift our focus to a crucial component of trading that many traders overlook: the exit strategy. It's easy to get caught up in the excitement of entering a trade, the rush of seeing your analysis come together, the joy of hitting your entry point perfectly. These are the moments that traders often focus on. But what happens after you've entered the trade? This is where the real magic happens, or the real downfall. Your entry gay you into the trade, but it's your exit strategy that determines whether you will truly profit. This is the piece of the puzzle that many traders get wrong, often obsessing over the perfect entry while neglecting to fine-tune their exit strategies. This is a mistake that can cost you your profits, especially when the market turns unexpectedly. Here's the truth. Perfect entries with poor exits lose money. Average entries with excellent exits make money. The entry gets you into the game, but the exit determines how much you win. Think about it. Two traders enter the same stock at the same time, at the same price, with the same setup. One exits the trade at a 1R profit, while the other exits with a 3R profit. What made the difference? The exit strategy. Let me give you an example. A momentum trader tested 3 different exit strategies on the same setup over 100 trades. Fixed target exit. This strategy sets a specific target, like 2R, and exits once that target is hit. After 100 trades, the trader had a 45% win rate with an expectancy of 1.35R per trade. Trailing stop exit. The trader uses a trailing stop at the previous bar's low. This strategy produced a 38% win rate, but an expectancy of 1.52R per trade, showing a slightly better result than the fixed target. Hybrid approach. In this strategy, the trader scales out of the position by selling half at a 1R profit and trailing the rest. The win rate was 52% with an expectancy of 1.61R per trade, which was the most profitable approach. The takeaway here is clear. The right exit strategy can multiply your edge. Even with the same entry, using a different exit strategy can completely change the outcome of your trade. This is why successful traders put just as much, if not more, thought into their exit as they do their entry. Now let's take a closer look at why the exit is so important. The market is constantly shifting. What may have been a perfect entry point in the beginning of the trade can quickly become irrelevant as price action unfolds. The key to maximizing your profits is knowing when to exit the trade, regardless of whether it's at a profit or a loss. Exiting at the right moment before the market reverses or fades is what separates the amateurs from the professionals. One of the most common mistakes that traders make is holding on to their positions for too long, hoping that the price will keep going in their favor. They watch as their profit evaporates, or worse, they turn a winning trade into a losing one. This is where psychology often gets in the way. You might fear missing out on potential profits, or you might have a psychological attachment to the trade, believing it's going to turn around when all evidence points to the opposite. To counter this, you need to set rules for your exits before entering the trade. Predefining your exit strategy is essential. This includes deciding whether to take profits at a certain level, use a trailing stop, or exit at a specific time, depending on your trading strategy and market conditions. One of the best practices in trading is to establish these exit rules before you even place the trade. This way, you remove the emotional decision making that often leads to poor exits. The market doesn't care about your emotions. It only cares about the rules you set and whether you follow them. Here's an exercise to help you refine your exit strategy. Take your current strategy and test 5 different exit methods over your next 50 trades. Keep your entry criteria consistent, but experiment with different exits. Track not only your profit, but also how emotionally difficult it was to execute each exit. Some exits may be mathematically superior, but psychologically impossible for certain personalities. Finding the intersection of profitability and psychological comfort is the key to long-term success. Another important concept when discussing exit strategies is scaled exits. This is an advanced technique where you exit parts of the trade at different points. The first portion of your position might be exited to reduce risk, the second portion to capture the expected move, and the third portion to ride out the outliers, those big moves that can make a trade highly profitable. By breaking your exit into multiple stages, you can optimize your profits while managing risk. The biggest advantage of a scaled exit strategy is that it adapts to the market's behavior. If the market is moving in your favor, you can capture more profits by allowing the trade to run. If the market turns against you, you've already reduced your risk by exiting part of the position. This provides flexibility, allowing you to adjust to market conditions as they evolve. The key takeaway here is simple. Exits are just as important, if not more important, than entries. Once you realize this, you'll stop obsessing over finding the perfect setup and start focusing on managing your trades effectively. This shift in mindset will transform your trading approach and help you make the most of every opportunity that comes your way. By now, you've learned how important it is to have a real edge and how crucial your exit strategy is. But there's one more essential step that often separates successful traders from those who struggle: systematizing your trading. You've likely heard the term set it and forget it when it comes to systems, but trading is far more complex than that. The true value of a trading system lies in its ability to automate the decision-making process, removing emotions and inconsistencies from your trades. And here's the key. The best traders are not the ones who are glued to their screens all day reacting to every market movement. No, the top traders are the ones who create systems that make decisions for them. Systems that scan the market for valid setups and take action based on predefined rules, not gut feelings. The first step in systematizing your trading is clarity. Can you clearly explain your strategy in one sentence? If you can't, then it's time to simplify. A clear, actionable strategy is the foundation of any successful system. For example, let's say your strategy is to buy stocks that gap up over 4% after earnings with double the average volume and hold them if they stay above VWAP for at least 15 minutes. If you can describe your strategy in a single sentence like this, you have clarity. If you can't, then you need to refine your system until it's simple and specific. The second part of systematizing your trading is conditions. Every element of your strategy should be based on a clear set of rules. No ambiguity, no second guessing. Each rule should be measurable, testable, and executable. For example, when you say that a stock must gap up by 4%, What does that mean? Does it gap 4% or more at market open, or does it have to sustain the gap for a certain period? How much volume should it have, and what is the threshold for considering it double average? These conditions should be non-negotiable, no matter how you feel, no matter how excited you get when you see a setup. Once you've clarified your strategy and set your conditions, it's time to move into automation. This is where you begin to let the system do the heavy lifting. With modern trading platforms, you can create automated filters that scan thousands of stocks for you. You don't need to sit there manually searching for setups. Instead, you let the software do the work by filtering stocks that meet your predefined criteria. And once a stock matches your conditions, you can set up automated alerts to notify you of the potential setup. But it's not just about finding setups, it's also about automating your risk management. This is perhaps one of the most powerful ways to systematize your trading. Risk management shouldn't be an afterthought. It needs to be built into your system from the very beginning. Think about it. You could find the perfect trade, but if you don't manage your risk properly, you could lose everything on that one trade. That's why setting automatic stop losses, take profits, and position sizing algorithms are so critical. For example, you can set up a rule that says, if my winning streak exceeds 5 trades in a row, reduce my position size by 20% to protect my capital. Or perhaps, if my daily loss exceeds 2% of my account, stop trading for the day. These rules will execute automatically, no matter how you feel at the time. In fact, that's the beauty of systematizing your trading. It frees you from making decisions in the heat of the moment, decisions that are often clouded by emotion. But creating the system is just the beginning. You also need to track your results. Every time you trade, you should be gathering data. Did the trade meet your conditions? Did it follow the rules you set out? How did your exit strategy play out? What was your emotional state throughout the trade? By collecting and analyzing your trading data, you can refine your system over time. You'll begin to see what works, what doesn't, and where you can make adjustments. One trader who systematized his approach shared his story. I used to finish every day mentally exhausted, win or lose. Now I'm fresh at the close. My system does all the heavy lifting and I just supervise. My results improved by 40% because I was executing a system, not just relying on my gut feelings. This is the power of systematizing your trading. It allows you to focus on the high value decisions like managing your portfolio and adjusting to changing market conditions without getting bogged down by minute to minute reactions. As you start to systematize your trading, your role as a trader will shift. You'll go from being reactive to proactive. You'll no longer be chasing the market or scrambling to find the next trade. Instead, you'll be managing a process that consistently finds profitable setups and executes your strategy. The mental energy that once went into second guessing and hoping will now be used for higher level decision making. Is this the right market condition for my strategy? Does this trade align with my current edge? The ultimate goal is to build a trading machine that works for you, a system that executes trades according to a clear set of rules, without emotion, without hesitation. And as your system gets better over time, your confidence will grow. You won't be relying on hope or luck anymore. You'll be relying on a well-oiled system that works over and over again because it's based on proven principles. As you sit back and reflect on what we've covered today, let me ask you this. What would your trading look like if you stopped trading on hope and started trading on a system? Imagine waking up every day with complete clarity, knowing that your strategy has been tested, refined, and proven to work. No more second guessing, no more emotional roller coasters. Instead, you're operating from a place of confidence and precision, executing your trades with the knowledge that you're in control. The truth is, the markets are ruthless. They will test you, push you to your limits, and at times break you down. But it's not about surviving those moments. It's about thriving through them. And thriving comes from one thing: having a real edge, a system that you trust, that works for you, not against you. So as we wrap up today's video, take a moment to think about where you are in your trading journey. Are you still relying on luck, or are you ready to build a real edge that works consistently? The decision is yours. You can either keep pushing that car uphill, hoping it will one day start moving, Or you can get in the driver's seat, build the engine, and finally take control of the road ahead. I want to leave you with one thought. Building an edge doesn't happen overnight, but every step you take toward systematizing your trades, refining your strategy, and understanding the numbers is a step toward lasting success. Don't let the markets break you. Let them show you what's possible when you finally get it right. Thank you for watching. And remember, the real edge isn't in the charts, it's in you. So take that first step today and start building it.